Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Nitin Spinners, which is refusing to move higher. And let's understand why the stock is trading in a range and when it can move higher and you can make money. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. So Nitin Spinners was established in 1992 and they produce cotton yarn and fabrics and they export it globally to Europe and US and also produce it for Indian textile manufacturers. So they produce raw materials for cotton products here in India as well abroad. They have a lot of means capacity in terms of spindles and rotors as written here, around 300,000 spindles and over 3,000 rotors, plus it is one of the government recognized, you could see, cotton yarn producers, and enjoyed a lot of awards from the government over the years in terms of their operational profitability, etc. In terms of the financials, the sales of Nathan Spinners for June 19 were up 20% to 372 crores, whereas the PAT was down 95% to 1 crore. And the reason for PAT being down was a very big interest cost, that the interest cost has escalated for the company, as well as raw material cost, which has also gone up. So the cost of labor as well as electricity and products to churn cotton yarn, etc., has gone appreciably higher to what it was last year, and hence you see the profitability going down. The return ratios are very low, and this is probably one of the biggest reasons as to why the stock is trading at such a low price. So, what are the problems of the industry as a whole? And I mentioned that when I described about the textile industry and the problems in it, but this also relates to what is happening with Nathan Spinners. The most important thing is about power supply, because they are a unit which builds their facets through. You can say factories. So they are a manufacturing company and they require probably 24-hour power supply, and which is very erratic in many parts here in India. And there are power cuts in the region of between 4 hours to even 15-16 hours in some parts, and hence because of this erratic power supply, the operational activities of Nathan Spinners is getting hurt. Machinery, to change the machinery, there's a very high cost. So companies like Nathan Spinners and other spindle companies try to do with the current machinery that they have. Whatever machinery that they have to buy new would have to be bought from Europe, either Netherlands, Germany, etc., and then imported into India. And that is a cost in itself, and a huge cost at that. In that regard, many companies in the textile industry work with the machinery that they already have. That is a major concern for all companies in the industry as well as Nathan Spinners. And I have analyzed or looked at Nathan Spinners since 2012-13. I have traded in it also, bought the share at around 25-26, sold it in the region of 50-60 and made good amount. But I thought that the company would be trading at somewhere in the region of 200-250 rupees by now at least, but that is not the case, and we see the stock dwindling around 45-50 rupees even now. The reason is the high debt, and they are not able to pay their debt lower over a period of last 5-6 years. Since 2013 the debt has risen appreciably, and that has eaten into the sales number. So the sales have gone up, but eventually because of the debt, the bottom line has always decreased. The capacity utilization is low because of lower demand, and same is with the company itself. And the demand is lower because of the slowdown in the economy globally. So they're exporting to Europe, where in England there's a problem with Brexit. There are problems in Eastern Europe because of low jobs, and really the economy is in doldrums in Europe. US, the economy is picking up now, but over the last 2 3 years, it has not been so good as it was, say, between 2013 to 15, with the incentives from the government that we saw. Uh, and this is a very capital intensive business. You cannot say that this is a simple cash rich business and you pay cash, buy products, make the food, like food companies do, make cake and sell it, and you have the cash straight away in your bank account. It's not like that, and this is a highly capital intensive business with machinery, etc., and payments to your lenders and so on and so forth, and that's why the debt is high. And this is the name of the beast, and this is how this sort of a business works. What are the problems of the cotton industry? Well, shortage of raw material, and they have to source raw material, which includes machinery from abroad. And this is a major concern. This time, the cotton production has been very good in India, and probably from FY21 onwards, we could see better raw material costs for companies like Nitin Spinners. Again, low productivity of labor is another cause for concern, and labor productivity has been a cause for concern for all manufacturing companies, be it in autos or in textile, etc., since the last 2 to 3 years. And this is where the slowdown has really hit India. And I suppose this is not going to go away, at least for the next couple of years, unless government take measures in order to propel the manufacturing industry. And the productivity of labor has increased in East Asia, in Indonesia, Malaysia, as well as in neighboring country like Bangladesh. And people are, or companies which are big brands into textile, are moving towards Bangladesh more than India because of this, because the cost is low and productivity is high in that region. So competition from other Asian countries, as I mentioned, is also eating into the profitability for textile companies, including Nitin Spinners. Excise and import duties, as I mentioned, on machinery, on products that are imported from Europe, is also taking a toll on these companies. And probably if that is looked upon by the government, they have looked at many aspects of real estate, infrastructure, consumer products, etc., with tax cuts and so on and so forth. Probably they need to look at excise duties also. That would help the textile industry itself. Sick mills is also costing the company and the country dearly. So the Indian government is putting a lot of money into the mills which are virtually they are not doing anything, not producing anything, non-productive mills. And probably instead of putting money into those mills, they need to help the companies which are at least doing reasonably well on the global footprint. So what needs to be done? Probably you need to wait for the turnaround. Don't invest at the moment if you have not invested into the company. Look for good quality cash rich businesses rather than buying capital intensive businesses. Even if you want to buy capital intensive businesses, look for capital goods or infrastructure firms, very good companies with low debt rather than textile. If you are at a loss which is less than 20%, then you need to sell and exit and buy into, as I said, cash rich businesses. And be cautious in such sectors until the sector turns around. No matter if you buy at a higher price, say you buy it at 60 65, it's okay when the sector has turned around, rather than buying at 46 and waiting for the turnaround. So have a 8 to 10 year view in these kind of sectors, otherwise you're not going to make a lot of money. So this was my video on Nitin Spinners. Please like and subscribe my channel, hit the bell icon so that you can get my video straight away when I post it. Thanks a lot for watching.